It is 12:01 in Nairobi, Kenya. Asubuhi njema, good morning, I still dare to say, from Kenya to Austria. Welcome, ladies and gentlemen, to today's webinar, Exploring Kenya's Tech Ecosystem. Thank you so much for joining our webinar today. My name is Andreas Pfleger. I'm the Commercial Counselor here in Nairobi, BKÖ Wirtschaftsdelegierter for Eastern Africa. It's a great pleasure for me to welcome you all to today's webinar. Let me give you a little bit of an overview what expects you today. First, we will begin with a welcome and introduction to Kenya, which I'm happy to provide to you. Secondly, our first guest speaker, Tim Dagori Muiruri, is a venture advisor and lawyer. He will take us on a helicopter ride above Silicon Savannah and will give us an overview of what's going on, what's happening, and where the focus points are in this wonderful tech ecosystem here in Kenya. And secondly, one of the lions of Silicon Savannah will let out a mighty roar. Eric Wainaina, who is the GM for Conduit Africa, will explain how the FinTech and payment sector works in Eastern Africa and what the status quo is. And then finally, ladies and gentlemen, we have time for your questions. Please feel free to type your questions into the chat at any point during this webinar. And at the end, we will have a Q&A session where we will go through as many questions as we can. Before we dive into it, a little bit of webinar housekeeping. Number one, this webinar is being recorded. You all consented to this as you entered the webinar. I'm sure you clicked yes on the little box, otherwise MS Teams wouldn't have let you in. This recording will be shared with all of you, so you can rewatch the webinar and share it with other interested colleagues that you might be aware of. Secondly, the presentation slides you're currently looking at will also be made available to you, so no need to take elaborate notes or screenshots. Please, finally, again, ask questions via chat at any point in time. They will be answered at the end, and we'll go through the webinar and collect your questions to then answer at the end of the webinar. And this is it for the webinar housekeeping. And now we begin with a short introduction to Kenya. Again, my name is Andreas Pfleger. Since July last year, I'm the commercial counselor here in Nairobi, Kenya, responsible for 10 countries in Eastern Africa. And it's my pleasure to speak with you today. Let's take a look at Kenya. We'll take a bird's eye view to get a little bit of an overview with the latest data on Kenya. This is all sourced from The Economist, which is quite a good data source when it comes to Eastern Africa and Kenya. Population in 2024, 56.4 million in Kenya. Population is still growing, and most significantly is the median age of 19.8 years in Kenya. This is a very low median age. This is, of course, a story that has been known about Africa. There's a young population that is moving into the workforce that wants to build careers, lives, and success. And this is one of the many factors that make Eastern Africa and Kenya such a dynamic place. Unemployment rate is projected to go down from 5.8% to 5.6% from 2024 to 2025. Unfortunately, it seems like the actual number might be a little bit higher. It's a challenging situation, but the government is working to ameliorate the situation. GDP per capita for Kenya, currently $6,685 US, plus 5%, which is a positive development from 2023 to 2024. Gross domestic product growth, which is of course also an important indicator of economic success. In 2024, Kenya's GDP grew by 4.7%, and it is set to grow by more than 5% in 2025. Inflation, unfortunately, also set to increase a little bit from 4.5% to 5%, but overall these parameters are in a good place. Secondly, let's take a little bit of a look back what happened in Kenya in 2024. I'm going to cover these points quite quickly. As I said, the slides will be made available to you after. March, April, May brought heavy rainfall and disastrous floods to Kenya. Nationwide, people were in danger and unfortunately lives were lost. Climate change is also a reality here in Eastern Africa, and unfortunately it seems like these very heavy, very unusual rainfalls were a sign of that. In June and July, the government was faced with some challenges. The young people of Kenya were dissatisfied with the proposed tax amendments, implementation of new VAT on some basic goods that President Ruto proposed, and therefore these young people took to the streets and protested. The government reacted by the president ultimately withdrawing his proposal. However, that situation is still ongoing, and also the need for financial inflows for the government is still a topic that they need to deal with. October to November, again, the government is in the headlines. Deputy President Rigathi Gachagua gets impeached and removed from office and is replaced with Kithure Kindiki, who's a close ally of President Ruto. In November, again, the government makes headlines by cancelling two hotly debated public-private partnership agreements with India's Adani Group. This was about the international airport and power transmission, basically the power transmission network in Kenya that the Adani Group wanted to take over. In December, the Central Bank of Kenya made positive headlines by slashing the interest rate by 75 basis points, which brings the interest rate down almost 2%, almost 200 basis points from its peak. Positive development. Looking forward, 2025, what are we expecting to happen in Kenya? The IMF financial support program for Kenya will, of course, continue. It will also continue to bolster investor confidence and support the reforms of the government. But the fiscal targets are challenging, ambitious, and will be tough to meet. Fiscal consolidation is something that the government is also working on. Privatization of state-owned enterprises, the Kenya Pipeline Company, the electricity generating company, banks, airports, power transmission infrastructure is also ongoing, but progress will be slow. Positive news, economic growth will quicken in 2025. The overall situation is looking stable for Kenya, and the economist predicts that economic growth should carry all the way until 2029. So if this is true and if these numbers hold up, this will again be a positive factor in Kenya's overall story. Thirdly, the Kenyan government will heavily have to prioritize trade liberalization, especially in the East African markets. We're talking about 300 million consumers here, which is what makes Kenya such an attractive hub for many Austrian companies. You have access to 300 million consumers in Eastern Africa. If this regional integration proceeds as planned, this will be a core growth engine all the way to 2029, according to The Economist. Trade between Austria and Kenya, just a quick look. What does Austria export to Kenya? In total, goods worth about 20 million euros, plus 36%. 2023 to 2024, January to September compared. Number one, optical and photographic equipment and measuring and testing instruments. A lot of these go into industrial sectors, whether it's cement, whether it's food production, a lot of measuring and quality assurance equipment from Austria here in Kenya. Boilers, machines and apparatus and mechanical devices worth 3.6 million euros. This covers everything from renewable energy to packaging to recycling, and is of course a core strength of Austria's export economy. And thirdly, drinks, alcoholic liquids and vinegars included. I'm sure most of you can think of one or the other product that's bottled or produced in Austria or by an Austrian that is popular all over the world. Kenya to Austria, 12.7 million products from Kenya to Austria. Number 1, 2, and 3 are all in the agricultural space, which tells you a lot about what Kenya is doing at the moment. Living trees, plants, and cut flowers. Mainly the last point, cut flowers. Kenya is a major player in the global flower trade. Almost 7 million euros, more than 50% of all exports that Austria has from Kenya are flowers. Secondly, we have vegetables and edible plants. The Kenyan soil is truly fertile and produces not only good quality, but also good quantity. And thirdly, we have fruits, citrus peels, and melons, which again is thanks to the very fertile soil. Where do we, the Advantage Austria office here in Nairobi, see the opportunities and the important points when it comes to market entry? Renewable energy, healthcare, agriculture, water management, and financial services. Those are the 5 areas where we see tangible and strong opportunities for Austrian companies. 3 things every Austrian company needs to keep in mind. Business in Africa is a marathon, not a sprint. This is also the topic of Africa Day 2025 happening in 1 week exactly, 28th of January in Vienna. I hope to see many of you there. Secondly, it's important when you enter the market here in Kenya and Eastern Africa to have realistic expectation when it comes to how quickly you can develop your business and also the kind of consumers and clients you can expect to find here. Everything is available. You just have to have the right offering to find the right partner. And thirdly, adaptation as a requirement. Most Kenyan businesses are very well connected with Indian and Chinese suppliers of mass products at a low price. So the chance for Austrian companies and Austrian suppliers really lies in the adaptation of solutions to customer needs. Ladies and gentlemen, before I hand over the stage to our first guest speaker, let me invite you all to come visit me. We have a trade mission coming up to Africa Tech Summit, which is taking place in Nairobi on February 12th and 13th this year. So a little less than a month to go. We're organizing a trade mission. I would love to welcome all of you here. This is how you really get to understand Silicon Savannah, by traveling here and by making connections from one human to another. But step number one to successfully entering the East African and Kenyan market is taking part in today's webinar. So congratulations and thank you to all of you for doing that. I will now hand the stage to our first guest speaker. Tim Dagori Muiruri is a venture advisor and lawyer who has traveled extensively in Eastern Africa, is very well connected in Kenya's Silicon Savannah, and will now again take the steering wheel of the helicopter and take us on a helicopter ride above Silicon Savannah. Tim, the stage is yours.
All right. Thank you very much, Andreas. Good morning, good afternoon, depending on where you're coming to us from. As you heard, my name is Tim Dagori Muiruri. I'm a lawyer in technology, startup and venture advisor, dedicated to supporting startups, venture capital, and angel investors. I provide legal, compliance, and operational advice to startup and technology ecosystem players in Africa at critical growth moments. I support UK, EU, and Asian businesses navigating African markets and identifying growth opportunities. So in the recent past, like Andreas alluded to, I just, in the period ending December, we led a market tour and partnership roadshow across 8 cities in 5 African countries. So even as I speak to Kenya, it's from that point. Previously, I've been a board member and policy advisor at the Association of Startup and SME Enablers of Kenya, that's ASEC. And I'll mention ASEC a little later in my presentation. I've also been a practice lead at Co-Creation Hub, which is Africa's largest innovation and technology hub, with a physical presence in 4 African countries, but its work extends to over 20 African countries. So let's jump right into it. Why Kenya, right? And I think Andreas has done a good job, but allow me just to double click on 2 things, which is the digital and innovation leadership and a stable democracy. And when I say stable democracy, I'm speaking to what allows strong institutional support from both public and private sector. So Kenya's ecosystem is buoyed by deliberate policy interventions, a risk-tolerant government leadership, public-private collaborations, increased research funding, entrepreneur support organizations, and that foster innovation. So specifically the entrepreneur support organizations, and I'll speak a little more on that. So Kenya is actually known as Africa's Silicon Savannah, right? And it boasts a thriving ICT sector, innovative startups, and a skilled tech workforce, right? We have high literacy rates. For your information, 55% of Fortune 500 firms have an office in Nairobi, with most of them being their Africa headquarters. I'm talking big tech, Microsoft, Meta, Google, Visa, IBM, Intel, among others. And Kenya is actually Africa's leading investment hub. In 2024, we secured a little over $600 million, and that was for a 2nd year running. Now, when it comes to government and private sector support, this is important because being one of Africa's most stable democracies, provides predictable and conducive environment for investors, right? And this is supported by robust institutions. When it comes to government support, we have what is known as the Kenya National Innovation Agency, or Kenya for short. And this was a government agency enshrined in law and mandated to come up with a national innovation ecosystem, coordinate, promote, and regulate the same. In fact, Kenya has a goal of 10 unicorns in 10 years. Kenya, not Kenya, is also one of a bunch full of countries globally that has startup law, and I'm proud to say I was part of this. It was a bill that was just recently passed by both houses of parliament and should become a law. So in terms of government support, there's a lot of that. And these are the numbers. If we look at an overview of the ecosystem, tier 1 status, and when we're looking at the startup ecosystem map, I'll sort of break down what that means. Kenya is also big 4, as compared, that's Kenya, Nigeria, Egypt, and South Africa. In terms of startups, SMEs, and then hubs, incubators, and accelerators, which we can all agree are very important, all the way down to even what are called constituency innovation hubs, right? And university hubs as well. So let me go to the map first. So when we look at what would constitute a startup ecosystem, Kenya possesses strong fundamentals. There's a clear path when it comes, a clear path for founders to follow from idea to exit, right? Operating environments, we've spoken to that, the government policies, digital infrastructure as well. Things like the subsea cables, mobile broadband, and a lot of that Andres has spoken to. So in terms of being a mature ecosystem, as far as the African continent is concerned, Kenya is right up there. Now, something more important, well, not more important, but just as important, is to speak to the Kenya Entrepreneur Support Organizations. This is a map of ESOs, we call them ESOs in Kenya, 150 and counting, right? And in sector focus, agriculture and sustainable livelihoods, we have manufacturing, e-mobility, green and circular economy, edutech, all manner of support. And these are then supported by government. In fact, with the ESO support ecosystem has grown to the point of where we now, the other day I came across a venture studio whose niche was supporting innovation in tourism, right? So it's been, I think when it comes to support, that's the ecosystem has really matured. But anyway, to move on to, allow me to take a look at that. Kenyan startups by sector, right? FinTechs, and this is replicated across several markets with a share of 30%. Then we have AgriTech at 10, HealthTech also tying at 10.1, e-commerce, EdTech, and others. Yeah. However, just to mention that we have seen quite a bit of upsurge when it comes to climate in the recent past for obvious reasons. But next, let me break down the FinTech. So this is the distribution, right? Payments and remittance, lending and finance. Allow me also, as I present this, to just mention some exciting startups in the sector. And like Andrea said, all this will be in my presentation. We have Cellulant. Cellulant is a leading Pan-African payments company. Some might argue that it's no longer a startup. M-Copper, that's a FinTech platform that provides digital financial services to underbanked consumers across Africa. We have Pesesha, that operates embedded finance platform that connects MSMEs with essential capital and financial services. There's Quara. Quara is a personal favorite. This is a startup that modernizes credit unions by transforming them into digital banks. We have Lipa Later, which is BNPL, buy now, pay later. Turaco, an insurtech company. As for the AgTech startups by category, this is what we've seen in the sector. Just to mention some personal favorites, there's Cinefa, that combines innovative technology with practical solutions. Sun Culture, This is providing solar-based irrigation and lighting solutions for farmers. How many people love coffee? I know I love coffee. There's a personal favorite called Project Mocha that actually invites coffee enthusiasts to make a meaningful impact by buying a coffee tree. And they use blockchain technology. One that is also big, and some of you may already have heard of it, Twiga Foods, what I like to call Africa's grocer. Twiga is a technology-driven company that connects consumers, vendors, and suppliers. And then we have Pula. Pula, one of the interesting things is it's a mix of both a FinTech and AgTech, if you like. And this is a company that is focused on providing innovative agricultural insurance and digital solutions to smallholder farmers, right? In the Kenyan health tech startups by category, this is a breakdown when we look at them. And this information, I should mention, the source is from a report, a sample size of about 500 startups across the ecosystem. So for health tech startups, this is what we have by category: health info, virtual healthcare, diagnostics, emergency response. Here, to give some examples, we have startups like Ilara Health that focuses on providing affordable diagnostic tools and emergency health response systems to healthcare providers in low-income areas. We have Izola. Izola connects families of neurodivergent children with AI-powered solutions. HealthTech, Africa, it provides a direct-to-patient healthcare provider platform to basically make high-quality primary healthcare and wellness accessible, affordable. Zuri Health, Neural Labs, there are several to speak of. Another exciting sector I thought to feature is e-commerce and retail. And this is the distribution by category, right? Some interesting startups in the space. Kapu, it's a social commerce startup that redefines basically access to consumer goods in Kenya through online retailing. Badili, our personal favorite, Badili is pioneering the growing demand for affordable consumer electronics in Kenya. So what they do is they facilitate the trading of used and refurbished smartphones, offering a convenient and eco-friendly solution for both the buyer and the seller. There's Duka. Duka provides last mile end-to-end supply chain and distribution technology for manufacturers. There's TwoShop. There's Shop Zetu. Shop Zetu enables seamless digital retailing, and they're focused mostly on the fashion industry. So in terms of the ecosystem, one might argue, going back to the map, all the fundamentals are present in the ecosystem of Kenya. And I think for now I'll be happy to take any questions. Thank you.
Wonderful. Thank you so much, Tim, for this excellent overview. As you said, a variety of sectors, a variety of industries that are thriving here in Kenya. Lots of players, lots of different startups. It's good to hear that there's also an adequate amount of support and encouragement coming from official institutions and other key stakeholders in the area. Thank you so much, Tim. If there's any questions, please type them into the chat. Like I said earlier, we will take some time to answer them at the end of the webinar. And now, ladies and gentlemen, hold on to your seats. Here comes the lion of Silicon Savannah. Eric Wainaina is a general manager for Conduit Africa, a payment company. And as I'm sure many of you know, payments are what made Silicon Savannah. The first big successes are, I think, almost 25 to 30 years ago when M-Pesa was established, one of the world's most preeminent and well-known low entry barrier, simple tech payment solutions that I think you can truly say, Eric, please tell me if I'm wrong, has significantly transformed not only Eastern Africa, not only Kenya, but I would say the entire continent and the entire globe. Eric, the stage is yours. I'm very excited to see what you have to share with us. Thank you.
Thank you so much, Andreas, for inviting me to speak. It's also a very huge delight for me. Previously, in a previous circumstance, I would be sitting on the other side of the table, as I used to work for Advantage Austria in Nairobi. A really great time for me to get to learn about Austria, got to learn about a global business, and I'm internally grateful for that experience. I know both Tim and Andreas spoke largely about the state of the fintech ecosystem. I mean, the state of the tech ecosystem, both in East Africa and Kenya in general, as well as an overview of the economy. But I'm largely going to focus on the Africa state of fintech. Wow. Oh, okay. I even forgot to introduce myself. My apologies for that. My name is Wainaina. I'm General Manager for Africa at Conduit. Previously worked at the organization, Advantage Austria, of course, but I've had a wide range of experiences in the tech ecosystem, working for early stage, growth stage, and more mature tech companies on the continent that are looking both to grow and scale. My experience, of course, has largely been around the fintech space, and I'm going to speak a bit about what that just looks like in general. So maybe to just dive right into it, I did put sort of like this phrase that I really liked, that tomorrow belongs to the people who prepare for it today. And admittedly, when you think about the state of the Africa state of fintech, it is equally the same. So for the longest time, we've had huge milestones and huge progress being made, both by companies, local companies and global companies. And what we are starting to see is a lot more deepening and a lot more interesting solutions. But then this did not just come from anywhere, right? It took a lot of like that preparation way back for that to be able to happen. And so I do have this sort of like little graph that speaks about the market size and what that looks like. As of 2023, according to a McKinsey report, African fintechs generated about $10 billion in revenue, which is a significant number. Then fintech was also one of the leading sectors, like Tim mentioned, a couple of companies attracting funding at least last year. And this was a significant decline from nearly $1 billion down to $419 million, despite the slowdown in funding globally. But then what's much more interesting is as a share of remittance, being one of the largest spaces or one of the largest verticals in the fintech space, we are seeing that remittance are contributing about 5.2% of Africa's overall GDP, or about $100 billion, which is a significant number. So you have a lot of African diaspora, whether in Europe, Asia, the Americas, beginning to send more money back home, and small ticket sizes for largely sustenance, healthcare bills, and the like, to much more interesting use cases, from investments to interesting verticals such as land buying and accessing government securities. So growing and growing. But then away from those rosy numbers, let's just speak about what the Africa FinTech imperative looks like. Or rather, what are those three major building blocks that have allowed this to exist? Number one, if you are going to build great fintech, then you need infrastructure. And then if you need infrastructure locally, when you think about it in Africa, it's around three things. One is majority of our transactions are still in cash. So we need to figure out a way to have those cash in, cash out sort of like nodes or sort of like touch points. Two is you have telcos being a leader in allowing for the proliferation of fintech. So telcos here will be companies such as Safaricom, the mothership of M-Pesa, or MTN Africa, which is the mothership of MTN Money, that offer this sort of like baseline that allows for individuals to digitally interact or make digital payments in whichever shape or form. Then, of course, you have the banks. In some markets, because again, the continent is not very monolithic, in some markets such as Nigeria and others, you have bank-led fintech infrastructure. Whereas in markets such as Kenya, Zambia, you have fintech-led, you have telco-led infrastructure. So sort of like that balance needs to, is one of the areas that has really allowed for fintech to really grow and scale. Second of all is the technology. And by technology, I'm merely talking about the payment flows and the payment methods. So card, How do you get to move from cash into digital money? And so it's understanding these payment methods: card, mobile money, could be bank, could be PDQs and the like, as well as the payment flows. So how is the money moving around? How is the money moving from one user to the other, from one business to the other? What are the collection points? What are the payment sort of like points as well? Then that is the expertise. And for this, with the expertise, I'm speaking largely about layered services from a compliance, onboarding, and KYB process, as well as folks that deeply understand the space and what the payment space looks like. And the beauty about all this, as you can see here, is they've all come together, all those three nodes, and they've allowed for this sector to really, really grow and scale and really, really emerge as a beacon of innovation on the continent. And so can either one of these three, can we have the fintech ecosystem essentially working and growing as huge as it is working without either one of the three? I doubt it not, because again, if you have the infrastructure and you have the technology, but you do not have the expertise of folks or layered services that can be able to allow that to happen, then you do not have anything. Equally with the infrastructure and expertise without the technology node, or technology and expertise without the infrastructure node. But then the beauty about when these three have come together and built this alchemy, what you've ended up building is sort of like what I call the fintech stack. And the fintech stack has three layers. One, a basic layer, and the basic layer is largely powered by the wallet and the payment methods. So with the wallets, you have, just think about a mobile money wallet or a mobile money service provider being able to provide that orchestration layer. It's a basic, it's where the cash in, cash out takes place. Equally with the payment methods, is it card, is it mobile money? And sort of like that is a basic layer of the stack that has been able to operate. The second layer that you're starting to see is now deeper use cases start to emerge. Cross-border payment, remittances like I was speaking about, B2B payments, blockchain and crypto. So because of what I spoke about, these three coming together to build this stack, we had these wallets and payment use cases or one layer being built. And on top of it, what you've ended up seeing is deeper use cases starting to emerge around these three, and of course there is a variety of other use cases that we've also seen. But man, what is actually much more exciting is you're starting to see this financial services innovation layer starting to emerge across sectors: lending, insurance, wealth tech. So for instance, and I know Tim mentioned a bit about it, is you're starting to see an agricultural company not just focusing on the direct lending to the individual, but then figuring out how can I marry my agricultural sort of like solution with direct lending solution, taking advantage of the existing wallet and payment infrastructure that exists. Equally with the insurance, like he again mentioned. And again, we're also seeing the same thing with wealth tech. And so to me, this financial services innovation layer is what is going to become one of the largest and most exciting aspects of like the entire fintech ecosystem on the African continent. Again, there's much more interesting things that we're also starting to see. So the fintech layer, the fintech stack layer, sorry, is not even 1% built. There's still a lot of interesting challenges and a lot of huge difficult problems existing. One is high transaction fees. So I will give an example with the remittance industry. It costs about 8% to send money for an African to be able to send money in from around the world into the African continent, which is really, really high. It's again, and the average sort of like global cost is about 1 to 3%, but in Africa it's about 8%. In the B2B space, it's even worse, where if I am making a payment into, say, China to pay for goods and services, or into the US, it is again really, really high. It's going to be both a combination of fees and a percentage of the total transaction size, which again makes it very, very difficult. The beauty about it is, and I will speak a bit about that, is the challenges mean that opportunities still do exist. Two is interoperability. So you have all this great tech being built around here, but then still not speaking to one another around the infrastructure layer. So you do have a lot of sort of like siloed platforms and siloed technology, but then not speaking to one another. And of course, that does not mean a great service to the end consumer. We end up, the end consumer ends up paying, again, higher fees and struggling to, again, make payments. So I'll give an example, for instance. M-Pesa is I believe in about 8-9 countries across the entire continent. But then it is still very, very difficult for me, a user of M-Pesa in Kenya, to be able to send money to a user of M-Pesa in, for instance, South Africa. It is still a very expensive and a difficult process. Equally, with moving money between my M-Pesa to bank or bank to my M-Pesa, so you lack that interoperability, and it brings in a lot of friction that has become, that of course leads to not great user experience, and second of all, leads to difficulty for the users to be able to access multiple services. So for instance, if in some instances you have to move your money from your bank account to your mobile money to be able to pay into a unique wallet address at a merchant store, for instance, equally with card. And so these are some of the challenges that we're also seeing in the fintech space. 3 is regulatory clarity. So this is an area that regulators have really, really worked very hard to improve, but still a lot needs to be done. One, I'll give an example with the B2B cross-border payment space. So a lot of B2B cross-border payment space is still treated as remittance. Very, very different use case, very, very different avenues. So the remittance space is largely focused on small ticket sizes. The B2B cross-border payment space is focused on larger ticket sizes. And so how do those rules start to emerge? Another example is on the challenge of interoperability. Regulators, again, have to lead in sharing the pathway for that. Crypto, for instance, still lack of rules, despite Africa being one of the fastest growing crypto markets globally. And so this lack of regulatory clarity or hyper-siloed regulatory regimes has become a very, very big challenge for majority of either innovators or consumers as well. And finally, I'll also speak about delayed payments. And delayed payments is a huge challenge, particularly around moving money across borders and even moving money across domestically within our own continent. So in Brazil, in India, and in Nigeria as well, you've seen the coming up of faster payment platforms. So Pix in Brazil, you have NIBS in Nigeria, and have UPI in India. And this has solved the challenge of faster payments. But then this does not exist in all manner of countries. Challenge that exists in Kenya, challenge that exists in South Africa, challenge that exists in Uganda, among various other markets. But then the beauty about it is all these challenges, in my opinion, present very, very huge opportunities for innovators, for Austrian companies, for global companies, and for companies all over the world. And I can speak a bit about some of these opportunities that I'm seeing. One is, again, like I was speaking around the cross-border payments. So helping African businesses to pay and get paid globally. The high transaction fees that I spoke about around challenges do exist here. So if I am a flower exporter in Kenya and I'm sending my flowers to Austria, for instance, how do I get paid? And how do I make sure that my cash conversion cycle is really, really quick? Again, we have to rely on a lot of bank mediated channels. Now, let's even move away from a very large use case. And we speak about me, a Kenyan, looking to pay for my Netflix or looking to pay for my Spotify or looking to shop on Amazon. That infrastructure still does not exist. So you have to issue me with a virtual card. I have to top it up with money. And then I have limits about how much I can spend, how much I can be able to receive. And those are some of the challenges that we've seen a lot of African businesses experiencing. Even gets worse, if I am an African business, I sell my shea butter on Amazon, for instance. How do I get paid? Or I'm selling I have a small florist shop selling flowers in Austria. How do I get paid? What payment methods exist or payment options exist? And so that's a very, very huge untapped opportunity that I think majority of innovators can start to think about. 2 is asset-backed lending. I know Tim did mention a bit about the BNPL, buy now, pay later notes. So it's still a very, very nascent industry, and it's largely focused on household items. But then this can be extended to all manner of spaces and all manner of industries, from businesses being able to experience BNPL, so for instance, for their office infrastructure or the like, to basic services such as me being able to acquire a device or me being able to buy a computer. Equally, inventory and receivable finance for businesses. So if I have delivered goods and services to a large manufacturer or a company in Austria or a company in Kenya, and I can't get paid based off of that invoice, then that ends up hampering my growth and scale as a business. And so that's also a very huge existing opportunity that is, again, untackled. 3 is SME lending. So I know, for instance, you have a lot. Austria is a country that has grown off of the backbone of small businesses. Africa, again, is equally as well. We have a proliferation of very, very many small businesses offering all manner of goods and services. But then all those businesses struggle to raise capital or struggle to receive adequate lending to be able to grow and scale their operations. These are very good, very bankable ideas, very bankable businesses, but they still struggle with the same sort of like challenges. And it's, again, another interesting opportunity that can be taken advantage of. Embedded finance. So again, let's come back to the infrastructure bit. A lot of us end up buying goods and services, for instance, or getting access to multiple touch points with, for instance, e-commerce. I go onto my Safaricom line. I pay for goods and services to a supermarket, local supermarket, but then that ends there. There's no further interaction. But then all those touch points have a huge play with which we can be able to embed financial services. One, from loyalty points. Two, to the ability to receive BNPL services, for instance. Three, to the ability to be able to buy insurance, for instance, with whatever goods and services. And so that's another huge service or another huge touch point that we've seen. Globally, I am very, very impressed by a company like Plaid, and we do not have a Plaid for Africa that is doing such a thing, allowing for these interactions that African consumers have with payment channels to have additional services layered on top of them. E-commerce as well. So you have a very huge growing middle class across the entire continent that is keen to access global markets, shopping on Amazon, shopping on AliExpress, and that you can layer services on top of, logistics to payment methods. And all that is, again, another huge untapped opportunity that I think is keen to be taken advantage of. Blockchain and crypto. Very, very exciting time. You have countries such as Kenya working towards coming up with rules. South Africa has already done it. Early conversations happening in Nigeria as well. And so from both consumer levels to business level, this is, again, another very, very huge untapped opportunity. There's a huge demand. So I would say, for instance, with very, very inflationary economies, where your savings can get decimated, then crypto offers an interesting alternative to be able to buy, to save. And then as rules become clearer in more markets, then again, it becomes a very interesting opportunity. Regulatory tech. So I know there's a couple of interesting Austrian companies that offer KYB and KYC solutions. And as you see a lot of FinTechs growing and a lot of FinTech businesses growing across the entire continent, that could be a very interesting solution that can be taken advantage of. So from ability to scan prerequisite documentations during onboarding, to being able to flag transactions, to being able to, again, allow a consumer to sign up to a service and have their face or fingerprint taken and scanned to verify that indeed they are the user that that was there. So that is, again, another interesting untapped opportunity. Then finally, I would say wealth tech, access to global and local wealth opportunities. So with a growing middle class and with growing wealth across the entire continent, then there's interesting opportunities for people to be able to save both in local currency and global currencies, be able to buy global stocks, for instance, or be able to access offshore opportunities that might exist for this. And again, a very, very fast growing opportunity that can get taken advantage of. So when I think about the state of FinTech on the entire continent, this $10 billion in revenues that we've seen is just a very, very tiny aspect, tiny scratch of the surface. Majority of this has come from payments. Majority of this has come from remittance. But I think there is a very, very huge and massive opportunity for any innovator, for any company, for any individual to come and take advantage of or come and become a service provider across the many opportunities that you mentioned. Thank you so much. I hope I have not spoken very fast. I get accused of that a lot. But please let me know if you have any questions or if you have any comments, or if you have, if you honestly want to have a conversation about what I think about the state of FinTech on the continent.
Asante sana, Eric. Thank you so much. Ladies and gentlemen, that's what it sounds like when a lion roars. He gets louder, he gets stronger as he hunts. Eric, it's very obvious that you care deeply about this sector, that you've been working in it for a long time, and that's excellent. Thank you so much for sharing your insight with us. Tim, can I invite you to also unlock your camera, show your face once again? And ladies and gentlemen, it's time for your questions, please. The Silicon Savannah is in front of you and it is all yours, ready for questions. We have 2 questions in the chat, so we will begin with those. The first one, you know what, both of them, I think both of you should share your opinion because they're very interesting questions. The first one is, while recognizing the endless potential of Kenyan startups and the advantage of their partnering with international partners, kindly advise on the future of the startup sector in Kenya, given the current challenges, especially in regards to access to finance. Investor confidence is then also mentioned in this question. So we're talking about how can Silicon Savannah continue to grow when access to finance seems to be one of the challenges? Question 1, is access to finance actually a challenge? Question 2, how can the financial needs of the Silicon Savannah be met? I'm sure there's no ecosystem in the world that says, no, please don't give us any more money. We have enough funds, including Silicon Valley. These ecosystems are, of course, imprecise scientific experiments, I would say. You can't actively or, directly measure if I put in X, Y will come out. You put in something and something else comes out, but correlation and more importantly, causality, what actually caused the outcome that occurred, in my experience, is a little bit tougher. But please, Tim, if you could go ahead. Endless potential of Kenyan startups, challenge of access to finance.
Yeah, thank you. That's a very good question. I think to enhance investor confidence and address financing gaps, Kenyan startups, and already a lot of us in the ecosystem are working towards this, should prioritize building robust governance structures, right? This is so as to demonstrate clear product market fit, leveraging emerging funding models, stuff like venture debt, blended finance, even crowdfunding, and then collaboration between government, private sector, and global partners is critical also to improving some of these regulatory frameworks, right? Then streamlining processes and fostering transparency. And I think it's a combined effort. And it's something actually that I think is very clear to most of us. Additionally, I think showcasing success stories and exits will create a cycle of confidence, that can be able to attract both local and international investors. I know sometimes we tend to speak to the failed quote unquote startups, but being able to do this, I think will help. And then by addressing these challenges, strategically, I think the Kenyan startup ecosystem can cement its position. Yeah.
Wonderful. Thank you so much for that, Tim. Eric, anything you'd like to add to that? Maybe some questions, like keywords that pop into my mind are also blockchain-based financing. Is that something, decentralized capital raising for startups and ventures in Eastern Africa?
Yeah, amazing. Tim, I think Tim has tackled majority of it, but I recognize the critical role that investors play in helping businesses grow, scale, launch. I also have a firm belief that there's no better investor than a paying customer. And in my sense, I keep saying to startups that I do intersect with, if there is a way for you to build this company, get a paying customer, prove your model, it really, really helps you in a couple of ways. One is your investment journey is going to be fairly easy. You already have a track record. You're no longer experimenting, and there's nothing investors love more, and Tim can speak a bit about this. There's nothing investors love more than seeing great track record or businesses already having done well. That's one. I do think then the second thing is to add on to Tim's point is, I hope to see a lot more interesting local capital playing a critical role in getting this FinTech, these companies to understand, to raise money, because local capital is more nuanced. They do understand the challenges that these businesses face. They do understand the size of the market and the scope of it. And so I think if we can begin to see a lot more interesting local capital, that would be interesting. But then onto your point around different avenues of fundraising, Absolutely. I think tokenization is going to play a very, very critical role in getting a lot of businesses to raise fundraising. It could even be tokenization of an invoice that they have, right? And so you have this invoice, you've gotten paid by a customer, you tokenize it, you raise money from it, you get paid, and then you pay back whoever your investors were. So I think some of those pointers would be very, very interesting. Wow, I have so many points. The final point, because I do know that there was a similar, there was once an Austrian company, I think it was called Startup Wise Guys, or rather it was run by two Austrians that was involved in sort of like the fundraising space. Is I hope for fintechs that cannot raise money from traditional VCs, do not have a paying customers, then an easier pathway would be good to go through an accelerator program. It helps them prove the financial model, learn a lot more skills, prove that indeed the business can work. And then once that's done, they have an easier pathway, an easier go-to-market pathway, in so many words.
Excellent. Thank you, Eric. Wonderful addition to what Tim said already. And I particularly love the last thought. There's different avenues. There's not one fits all answer. It always depends on the sector, on the size, on the age, on the stage. But it seems to me, and this is also the impression I get from when I talk to people out there, you're not gonna not turn a company into success because you can't find money. You have to be creative, like you said, looking back and showing these are the happy customers, these are the invoices, these are the orders. At the latest, that usually unlocks something in a financier, and they'll be happy to invest. Second question, and gentlemen, first of all, this question begins with a thank you for your valuable insights. And secondly, the question admits that this is a question that's a little bit beyond the scope of today's webinar, but I'm sure you both have an opinion and valuable insights on it. African Continental Free Trade Agreement. We talked about border crossing payments. And you know what, as you were speaking, Eric and Tim, this took me back to all of these things were a problem in Austria before we entered the European Union. And we got that regional market integration that made bank transfers almost instant and basically free, that made roaming with your phone within the community basically free. So these are just things that need to happen. African Continental Free Trade Agreement. Where are we at? Where is it going? Eric, do you want to take the lead on this one?
Yeah, sure. So to me, still one of the most exciting things that is likely going to come out of this continent. For too long, companies have not traded with one another, very, very high barriers of entry till now. And then you think about it, a market such as Nigeria has 200 million people internally. The entire South Africa region has, I think, 180 million. If you are building a business in Kenya, for instance, there's a lot more interesting local nuance with, like, say, Uganda, Tanzania, Zambia, etc. And so it makes sense for you to think about the entire African continent as your oyster. But then that has not happened for a very, very long time. You still have a lot of people looking inward and a lot of tariffs. And so to me, I do think that's going to be an exciting thing. And I hope it happens within our lifetime. It is accelerating. It is happening very, very quickly. On the point about cross-border payments, so one of the outcomes of the AfCFTA was this payment platform that was called the Pan-African Payment Settlement Platform, PAPS, PAPPS. And the beauty about PAPS is it allowed a Kenyan business to export into Ghana, get paid in Kenyan shilling, or get paid in Ghanaian cedi, but then you receive your funds in local shillings. So what they had done with this platform is they had aggregated all manner of payment providers, banks, to fintechs, to virtually everyone, right? And so PAPS is still a work in progress. They still have a long way to go because, again, different regulations, we are a continent of 55 different sort of countries, thousands of laws, hundreds of regulators. And so whereas the Central Bank of Kenya might be a bit more open, maybe the Central Bank of Ghana is not. And so it still is a work in progress. I hope, again, that it begins to happen a lot more. But then the reality of AfCFTA is already happening. Particularly Kenya has been at the forefront of this. We've exported a lot of tea, a lot of gum, I believe, car batteries as well. And so it is still a work in progress, and we hope, we hope it begins to happen a lot more.
Excellent. Thank you so much, Eric. Tim, the last minute is yours. Anything to add to that?
No, I think Eric has covered it pretty well, because the agreement sort of like is the overarching document that is to govern the trade across Africa. There's so many moving parts and bits and pieces, and I know for a lot of us, including myself, we can sometimes get impatient by the progress, but I think so far quite a lot has been done. In fact, even when it comes to working on some of the protocols. But to give you some hard numbers, I think 54 out of the 55 member states have signed the agreement. I think about 44 have deposited. And when it comes to rules of origin, it's probably over 80%. And just probably your better place to speak to that. So I think where there's a will, there's a way. And I think the will is there, yes, across borders. Having spent some time recently in several African markets, I think it's something that that is being pushed across the board. Yeah.
Absolutely. Where there's a hope, there's a will. Where there's a will, there's a way, even across borders. I think that's a wonderful comment. Thank you so much, Eric. You're right. I looked it up. 54 of the 55 African Union countries have signed the agreement to form the African Continental Free Trade Agreement Community. 45 countries have already ratified this agreement in their parliaments. And this process was only started at the beginning of 2021. So basically, we're now looking back at 3 years of activity. Year one is usually a slow one. But I think, again, as it was the case with the European Union, once the ball is rolling, the process will accelerate and the ball will just roll faster. 3 phases for the African Continental Free Trade Agreement. Eliminating tariffs, improving trade facilitation and harmonizing rules of origin is phase 1. As Tim said, this is almost done. Phase 2, investment, intellectual property and competition policy. And phase 3 is e-commerce and digital trade. So as we heard from our 2 guest speakers, there's hundreds of governing bodies in all of the participating countries, from a railway to road, from airspace to food quality. Harmonization across the board takes a while, but we're definitely heading in the right direction. Ladies and gentlemen, thank you so much for your questions. Once again, I'm repeating my invitation to all of you. Come to Kenya. We're organizing a trade mission to Africa Tech Summit in about 4 weeks' time, a little less than 4 weeks' time. We'll be sending information to you later this week. It'd be my pleasure to welcome you here in Kenya. Once again, thank you to our 2 guest speakers, Eric and Tim, and thank you to everyone who joined today's webinar. Best regards from Nairobi, Kenya, and thank you for your time. And goodbye. See you next time.